Imagine this. The market is crashing. Your phone is pinging nonstop. Your portfolio is down 20%, 30%, maybe more. Your stomach drops. Your friends are freaking out on social media. What do? Sell everything? Freeze? Or something else? In this video, I am going to show you exactly how I would invest during a crash without panicking, so you come out stronger on the other side. I have been there. In 2022, I watched my investments drop 25%. Friends were texting me, "Get out now." My heart was racing. I almost sold everything, but I did not. And by 2024, it had not just recovered, it had grown. That experience taught me something I will never forget. Crashes are not the end. They are opportunities, if you know how to handle them. This is not theory. This is what works for real people like us. Markets crash. It is completely normal. It happens every decade or so. The average crash lasts months, but recoveries take years, and they reward the people who stay calm while everyone else runs. By the end of this video, you will have a simple 4-step plan. How to think about crashes the right way. What not to do when fear kicks in. What to do instead. And how to actually invest more during the dip. Let us turn fear into fuel. Step 1. Reframe the crash. The first step is changing how you see a market crash entirely. A crash is not a disaster. It is the market on sale. Think about it this way. Amazon stock drops 30%. You are now buying last year's price for today's value. Great companies go on discount. The same business, the same fundamentals, the same long-term story, just cheaper. Now zoom out for a moment. Every major crash in history, 2008, 2020, has been followed by new all-time highs. Every single one. History shows markets recover. They always have. So your job during a crash is not to predict the bottom. Nobody can do that consistently. Your job is to act like a smart shopper when everything is marked down. Step 2. The 3 things you must not do. Most people make critical mistakes during a crash. These are the 3 you absolutely must avoid. Number 1, do not panic sell. Selling in fear locks in your losses permanently. You sell low, then you end up buying back in high later. Or worse, you miss the rebound entirely and watch from the sidelines while your money sits doing nothing. Number 2, do not try to time the bottom. Waiting around for the perfect lowest point usually means missing the recovery. Markets bounce back faster than most people expect, and by the time it feels safe enough to get back in, you have already missed the biggest gains. Number 3, do not hide in cash. Cash feels safe in a crash. I understand that feeling, but inflation is quietly eating your cash every single day it sits still, and you are missing the chance to own future winners at bargain prices. Here is the honest truth. All 3 of these feel completely right in the moment. They feel logical, they feel protective, but they are emotional traps. Every single one of them. Step 3. The 4 things you must do now for the actual plan. Simple, repeatable, and built for real people. Number 1. Stick to your simple plan. If you are already invested in broad index funds or ETFs, things like total market funds or trackers that follow major indices, stay there. Do not start chasing hot tips. Do not switch everything into something that feels safer right now. Quality investments survive crashes. They always have. Stay the course. Number 2, use dollar cost averaging. This is one of the most powerful tools available to everyday investors. Keep investing fixed amounts on a regular schedule. Say $200 every single month without fail. During a crash, your money automatically buys more shares for the same amount. It is like buying the same item on a discount. You get more for your money without having to guess when the bottom is. You average into the dip without the stress of trying to time it perfectly. Number 3, Check your emergency fund. Market crashes test your cash flow just as much as your portfolio. Before anything else, make sure you have 3 to 6 months of living expenses sitting somewhere liquid and completely untouched. If your emergency fund is solid, you can invest during the crash with real confidence because you know your basic life is covered no matter what the market does. Number 4, limit the noise. This one is underrated and it might be the hardest of all. Turn off your portfolio notifications. Check your investments once a week, not 10 times a day. Talk to a calm, rational friend who understands investing. Journal your long-term goals and why you started. Emotion clouds judgment. The less noise you feed yourself during a crash, the better your decisions will be. That is the whole plan. No hero moves, no genius stock picks, just discipline, patience, and consistency. Step 4, what it looks like in real life. Let me make this completely concrete so you can picture exactly what this looks like. Say the market drops 25%. Your $10,000 portfolio is now worth $7,500. Week 1, you feel the fear. That is normal. You review your plan. You do not touch anything. From there, ongoing, you keep dollar cost averaging $200 every month without stopping. Now your $200 is buying 30% more shares per dollar than it was before the crash. You are getting more for the same money. Months later, the market recovers. Your average cost per share is lower than everyone who stopped investing. You come out ahead. This is exactly what happened in the COVID crash of 2020. March 2020, pure panic. Markets collapsed. By the end of that same year, new all-time highs. The investors who kept dollar cost averaging through the fear absolutely crushed the panic sellers who cashed out and waited on the sidelines. You can do this. Genuinely. A crashing market feels personal. It feels like failure. Like everything you worked for is disappearing in real time. But it is not personal. And it is not permanent. The people who build real wealth are the ones who stay invested when everyone else is running for the exit. They are not smarter. They are not luckier. They are simply calmer and more prepared. That is you now. Calm. Prepared. Investing like clockwork, even when the world feels like it is on fire. Here is your move after this video. Write down your simple investing plan today. Right now, before you forget. What you invest in, how much, how often. Put it somewhere you will see it when things get scary. Set up automatic contributions so your investing happens whether you feel ready or not. And the next time a dip hits, and it will hit, you are going to smile because you will know exactly what to do while everyone else panics. Comment the words crash plan below if you want a free investing checklist. Hit like if this calmed you down even a little. Subscribe to Nuella Invests for more real talk money breakdowns every single week. And share this with that one friend who needs to hear it before the next crash comes, because it is coming for all of us eventually. Crashes come, winners stay. See you at the recovery.